This is Martin from Brokerage, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show, where we look at the technical charts and try to understand what exactly happened in the market during the day and then plan for a better trade for the upcoming day. That's March 15th, Friday 2024. So we had a decent bounce in the market index Nifty, but on the contrary, the banking index had closed negative after a very volatile move, and it has closed indecisive as well. So that is how the day had gone by. So let's analyze them first with the charts. We would look at the charts and then we would understand things. So this is that green candle that you see, that is what has occurred in Nifty. It's a wide range, it's bullish, wide range and bullish candle. It did dip in the morning today, but did not go below the previous day's low. Before that it reversed quickly and then tried to move above the 20 expression moving average. Couldn't do that, but a bullish decent bounce, you can say. If it had moved more than 50% of this red candle, then it would have been even more bullish with reversing kind of patterns, but that did not happen. Regardless, it was a positive close of nearly 150 points. But look at Banknifty, which normal cases would follow the Nifty. If one of the indices is bullish, and Banknifty also is supposedly turn bullish, but that didn't happen today. It did close negative 0.5%, 191.41%, and it lost the 20 exponential moving average support, and that would act as a resistance now. So yesterday it had managed to close above that, because yesterday was Banknifty expiry, today is Nifty expiry. And if you look closer, you can see that the candlestick is a doji, very small body and very huge wick size on both sides, indicating the big bull bear, the wild volatile moves that happened in the day. And look at where it had bounced up from. It had bounced up from the 50 exponential moving average of very close to 46,575. Seems to be at a support, and therefore there is a chance for probability of a change in polarity bounce up from here. Because this is a support, a previous support zone could act as resistance zone, could act as a support, and then can bounce up from here. So if you look at this, you can see that there was a breakout that had happened from this zone, right? And so that big green candle move that happened earlier on the Banknifty happened from this zone. So it's a close near that. So therefore there is a probability of probably it's not confirmed. It's confirmed only if the price moves above the candle's high. So there is a probability of a change in polarity or a bounce up move from the upside in the coming day. But today it didn't bounce. In fact, did dip and then did a reversal and then another inverted reversal. Means it was very volatile Banknifty that we are seeing, but still the pattern of higher high, higher low is intact unless and until it breaches the 45,660. Banknifty, we already seen that. So let's see where the price is. So we can see that the price is very much within the trend line, inside trend line I was talking about, and there is an outside trend line that is also maintained, and then looks like it did not move to the top of the trend line, instead was heading towards the bottom of the trend line. Midway it stopped, and that's where the price is put up. Banknifty in fact was very volatile all throughout. Yellow trend line is where it had spent time and it had fallen down multiple times and then recovered. Now it has climbed into that blue trend line and trying to stay there, right? And inside you can see another trend line channel with price hitting exactly the top and then reversing. So in Banknifty we are seeing it's the 5th day of retracement, nearly 3.5%, 3.4% of retracement has happened. And that's the 5 days of red candles, and looks like it's at the support zone, and then so that is where it is placed. The price is placed in the blue trend line channel, and a breach of that is heading towards the bottom of that channel. So the breach of that could be also a breach of 46,000. So 46,000 is a major place that we will watch out for. Let's look at the trend, the support resistances. So for Nifty, clearing the 20 expression moving average of 22,158 is crucial. So it's a good thing that it managed to clear the 22,000 big rounding number today with this 150 points of up move, right? 0.68% of up move, but it did not manage to close about the 22,158 20 expression moving average. So clearing that would be the first thing. Second will be clearing the 22,450, which is this yesterday's big bearish candles high. Once that is cleared, then it could be breaking out of the all-time high. Only resistance there is the 22,526. That's resistance on the upside. Downside, the 21,830 is the 50 exponential moving average support. That is very crucial, because if that is breached, the higher high, higher low pattern also gets breached. So maintaining this 21,830 is crucial for the Nifty. If that is breached, then it goes to 21,500 zones, where some supports can be found. The next swing low, and 21,250 is nearby, is where the 100 exponential moving average is there. Close by at 21,150. There is the gap support also coming in there. Then you have a 21,000 big rounding number. That's the supports on the downside for the Nifty. Banknifty, the resistance would be, the first one would be the 47,000, closing above that. It's also a Fibonacci 23.6 retracement, which would act as resistance now that it has dropped below that. So 47,000 is very crucial, but before that you have to clear the 46,900, which is the 20 expression moving average, which also Banknifty has lost today. So 46,900, then 47,000, and then the 47,900, and then 48,000, 48,236, like that, resistance till the all-time high at 48,636. That's quite that's quite far, like, so 1,700, 800 points now towards the all-time high again. So it is come as close as 500 points and then retraced for the 5 days, and then now we are quite far, and the 20 expression moving average is also breached. So the first support would come in at 46,575, which is Fibonacci, which is the 50 exponential moving average from where it bounced today. Then comes the 46,000, which is very crucial, which is a 38 Fibonacci retracement level plus 100 exponential moving average level, right? So confluence of that, and also it would mean that a breach of that would mean that it is fallen back into the yellow trendline channel, and also all the W pattern breakouts and flag breakouts will all get negated there. So as of now, right, so crucial support is 46.79 and 46,000 were the 100 exponential moving average, and the 38 retracement Fibonacci levels, and also very close by you have the next level at 45,700 where the previous swing low is there. So a close of 45,661 would mean that it would breach the higher low pattern there. So it's crucial that this level is not breached. So that's the support resistance on the Banknifty. So lot of time frames, if you see, you can understand the volatile moves in Banknifty. Did a dip, then recovered, then again reversed. Very volatile. Down, up, down. Very volatile intraday price action is what I see there. And Nifty also, if you see, it was mostly trending up with some volatility that came in between, but otherwise it was trending up, right? So opposite, contradicting behaviors between the indices today. In order to find the levels, you just have to go to the 1 hour charts. I'll clearly tell you that there is a swing low supports that comes in at 21,860, 830, that kind of level. So any breach of this zone would be, so this zone is what you have to watch out for. So breach of that would be trouble. Okay. Similarly, resistance is up there. So that's what things that happen. Banknifty, it can go up till here, right? So that is 46,000 nearby. So that's what you have to watch out for. If that is breached, it can go as low as 44,600, right? So it can go. So if this level of 45,700 is breached, then we have deep trouble. And that also would mean the breach of this trend line channel, swing low, only hourly, all that breach, it can go way down to 45,000 level. So this is the hourly charts of the Banknifty that we're talking about. So in order to find the levels, all you have to do is, what is the previous swing low? Right. So any breach of that could take you to the next level. So let's get back and try to wrap it up in words. So that's at 150 points, 0.68 gain. Bullish wide range candle, but it's an inside bar. Inside bars often indicate consolidation, and the close below the 10 exponential moving average is not that great. Remember, we had a 34% rally and a 4.5% retracement, and the market is now about 22K.147. Intraday, we have seen the Banknifty is at below the 47,000 big rounding number and lost 191 points and lost the 20 exponential moving average also. It did take a dip to find supports at 50 exponential moving average. We did volatile moves and the Banknifty closed negative. Closed indecisive as well with the doji. That's what Banknifty is. Banknifty kind of taking its most very time to bounce, but it's having a change in priority bounce probably is there. This is support resistance levels based on the hourly charts that I have put in there. It comes closer to what we talked about, right? So Nifty could find resistance towards the 22,500 as it is at 2150, right? And it could find support at 21,850 nearby zones, and then if that is breached, it could go as low as 21,500. That's what tomorrow's levels. Banknifty 46,000 is crucial, but it could find support at 46,500 as well. Similarly, 47 resistance is very crucial, and it can climb that and it can go as far as 47,500 as well. So in favor of the bulls, what's in favor of the bulls and bears is listed out here. Have a look at that. Yeah, and we talked about the momentum You didn't talk? Yeah. So momentum is sideways yesterday. It had fallen to the sideways from the bull zones, and obviously it was such a sharp fall. So, but today it has climbed back, not in the Banknifty, right? So that's in favor of the bears. But the Nifty it has climbed back, and it's sideways, not bearish yet, right? So higher low higher pattern, that's positive. Wix is cooled off, that's positive. Bollinger Bands is showing contraction, not expansion downside yet. That's positive sideways. Industry structure indices are all green today for some reason. Right? It had recovered. Whether that recovery is a dead cat bounce or not, we'll come to know tomorrow. So it's sideways momentum for all of them. None of them are in bearish momentum, except for the reality sector, all other major indices. Now even the mid cap also has recovered. Small cap index also has recovered. So that's positive. Heavyweight stocks are all sideways momentum, and even TCS is also climbing the bull zones now along with the ICICI Bank. So they're all having sideways momentum. None of them bearish as such. So heavyweight stocks that contribute maximum to the index, and the major indices are not bullish but sideways and not bearish. That's the main thing. That's in favor of bulls, right? What's in favor of the bears is the Banknifty not bouncing up today like Nifty had done, and closing negative with indecive candle and very big volatility. The Fyers were selling today also 1,356 crores, and they are buying very little. So Fyers are buying huge 4,500 plus crores of buying in the cash market, but today they are suddenly selling half of that. So Fyers are not really buying more and continue to be doing this hide and seek thing is worrisome. US indices are showing flat, well close in the middle of the rally. Retracement could come in any time. It's been running like how we are doing, and it's a long rally that is there. It's at all-time high levels on the US indices, Dow Jones, S&P 500, and Nasdaq, and all of them. Dollar is kind of flattish green, 102.89. Rupee remains to be weak, but flattish green, 82.82. I put them in favor of the bears because it's getting more weak. Rupee is getting more weak. So from the economy point of view, and therefore market point of view also, it's in favor of the bears. Crude oil is spiking up again. That's a worry. It's 80 plus now. We have a concern there. Oil importing company and oil is spiking. And gold is at the top, slightly red, but at the top, which gives us a concern that is the money getting shifted to safer haven from the equity market or not. So that's why it's in favor of the bear. So check out all these and then come to a verdict. So it's basically consolidation that's happening in the market overall. If you look at in the sideways, momentum is also sideways. Right? Price is not lost the higher low high pattern in the short term daily charts, and mid cap, small cap indices and sector indices are all fine. VIX has cooled off, but this 20 exponential moving average is like worrying on the daily charts that none of the indices could conquer. And Banknifty is is kind of slightly, weakish is a worry. So FIs are getting in, not getting in, are not getting into mistake, right? So that's a major concern. So for the next leg of rally, it requires the FIs to come in play. So they will do that under the Fed interest rate hike news comes in, which is next week, I believe. So from the investor's point of view, the savvy long-term quality stock investment can be done at such consolidations or pullback retracement zones. It's a time for doing that, not in bulk but in SIP. And for the trader perspective, market is non-directional, sideways, absolutely. So directional cannot be played, and non-directional is only going to do it with proper risk management and hedging the risk time. Right, managing your risk and portion size and everything is what I mean. And also for the investors, if you're already invested in stocks and that's going down, you can do the rental income strategies. Check out the playlist for that in the options, basically. So that's all I have. So we have a market which is sideways. It's consolidating. Still bullish, not too far from the all-time highs. But we gotta be very cautious when the code is rising, because markets at the very peak of all-time high, ready for retracement. All this is there. So anything could happen basically. It's neither bearish, neither bullish. That's what sideways is all about. So play it safe, right? That's all. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.